Welcome to the final episode of my car insurance experiment, where I'm going to give you the exact blueprint for building bulletproof insurance protection without overpaying. I'm Alex, and over the past 3 weeks, I've been testing both the cheapest and most expensive car insurance policies in Texas to prove what you really get for your money. What I discovered has completely changed how I think about insurance, and the strategy I'm about to share will save you thousands of dollars while giving you better protection than 90% of drivers have. But first, I need to tell you about the phone call I got yesterday that validates everything I've been showing you in this series. Remember Jennifer, the teacher from San Antonio whose story I shared in part 2? She reached out after watching my videos and told me something that perfectly illustrates the real-world impact of insurance choices. It turns out Jennifer actually had premium insurance when her accident happened, not minimum coverage like I used in my example. But here's the shocking part. Even with premium coverage, she still ended up paying over $8,000 out of pocket because she had made one critical mistake when setting up her policy. She had chosen a $1,000 deductible to lower her monthly payments, and she had declined uninsured motorist property damage coverage because her agent told her it was optional. When the delivery truck driver's insurance only covered $25,000 for her $22,000 car, she discovered that uninsured motorist coverage only applies to injuries, not property damage, unless you specifically add that coverage. So she got stuck with the difference between what her car was worth and what the other driver's insurance would pay, plus her $1,000 deductible, plus the gap between her loan balance and her car's value. This is exactly why I'm ending this series with a complete blueprint for optimal coverage. It's not enough to just buy expensive insurance. You need to understand exactly which coverage types to choose and how to configure them for maximum protection at a reasonable cost. After testing both policies extensively, interviewing accident victims, and analyzing hundreds of real-world claim scenarios, I've developed what I call the bulletproof coverage formula. This is the exact combination of coverage types and limits that will protect you from financial disaster without overpaying for unnecessary features. The first component is liability coverage, and this is where most people make their biggest mistake. Texas requires 30-60-25 coverage. But as I showed you earlier, those limits are based on 1980 costs and provide almost no real protection today. The minimum you should consider is 100, 300, 100, which means $100,000 per person for injuries, $300,000 total per accident, and $100,000 for property damage. But if you have any assets worth protecting, including your home, retirement accounts, or future earnings, you need to go higher. My recommendation is 250, 500, 250 as the sweet spot for most people. This provides real protection against major accidents while still being affordable. The second component is uninsured and underinsured motorist coverage, and this is absolutely critical in Texas, where 1 in 8 drivers has no insurance at all. You want this coverage to match your liability limits, so if you choose 250, 500, 250 liability, you want 250, 500, 250 uninsured motorist coverage. But here's the key detail that most people miss. You also need uninsured motorist property damage coverage. This is separate from regular uninsured motorist coverage, and it's what pays for your car when someone with no insurance or inadequate insurance damages it. Most insurance companies offer this for just a few dollars per month, but many agents don't mention it because it's not required by law. The third component is comprehensive and collision coverage with the right deductible. If your car is worth more than $5,000, you need both comprehensive and collision coverage. Comprehensive covers theft, vandalism, weather damage, and hitting animals. Collision covers damage from accidents regardless of who's at fault. The key is choosing the right deductible. Most people choose high deductibles to save money on premiums, but this is backwards thinking. The whole point of insurance is to protect you from unexpected expenses, so why would you choose to pay more out of pocket when something bad happens? My recommendation is a $500 deductible for most people. Yes, your monthly premium will be higher, but you'll save thousands of dollars when you actually need to use your coverage. The fourth component is rental car coverage, and this is where insurance companies make a lot of profit because people don't understand what they're buying. Standard rental car coverage pays $30 per day for up to 30 days. But if you've ever rented a car, you know $30 per day doesn't get you much, especially if you need a car for several weeks while yours is being repaired. Upgrade to the highest rental coverage available, usually $75 to $100 per day. The additional cost is minimal, but the benefit is huge when you need it. The fifth component is gap coverage, and this is essential if you owe more on your car loan than your car is worth. Gap coverage pays the difference between what your car is worth and what you owe on your loan if the car is totaled. Without gap coverage, you could end up making payments on a car that no longer exists, while also trying to finance a replacement vehicle. If you bought your car new, or if you put down less than 20%, you definitely need gap coverage. The sixth component, and this is the one that shocked me most during my research, is umbrella insurance. This is additional liability coverage that kicks in when your auto policy limits are exceeded, and it's the cheapest protection you can buy relative to the coverage it provides. A $1 million umbrella policy typically costs between $150 and $300 per year, but it protects all your assets if you're sued for more than your auto policy limits. Remember Rebecca from Part 2, whose minimum coverage left her on the hook for $790,000? A simple umbrella policy would have completely protected her for less than the cost of a nice dinner per month. The seventh component is medical payments coverage or personal injury protection, depending on what's available in your state. This pays for medical expenses for you and your passengers regardless of who caused the accident. In Texas, personal injury protection is optional, but medical payments coverage is available from most companies. Choose at least $10,000 in medical payments coverage, more if you can afford it. This coverage pays immediately without waiting for fault determination or dealing with other insurance companies. Now here's how to get premium coverage without paying premium prices. The secret is bundling and loyalty discounts that most people never take advantage of. If you bundle your auto insurance with homeowners or renters insurance from the same company, you can save 15 to 25% on both policies. If you've been with the same insurance company for more than 5 years, you qualify for loyalty discounts that can save another 10 to 15%. If you have a clean driving record for more than 3 years, you qualify for good driver discounts. If you take a defensive driving course, you can get additional discounts. If you install anti-theft devices or safety features in your car, more discounts. The key is asking about every available discount and making sure they're all applied to your policy. Most insurance companies offer dozens of discounts, but they don't automatically apply them unless you ask. But here's the most important strategy for getting premium coverage at reasonable cost. Shop for insurance annually, but don't just compare prices. Get quotes for identical coverage from at least 3 companies and compare not just the premium, but the coverage details, claims handling reputation, and financial strength. I discovered during my experiment that there are companies offering coverage almost identical to my $387 premium policy for around $250 per month if you know where to look and how to ask for discounts. The company that surprised me most was USAA, which is only available to military members and their families, but offers exceptional coverage at very competitive rates. For everyone else, companies like State Farm, Allstate, and Progressive offer good value if you configure your coverage correctly and take advantage of available discounts. But here's what you need to avoid. Never choose insurance based solely on price because cheap insurance is expensive when you need it. Never accept minimum coverage unless you literally have no assets and no income to protect. Never choose high deductibles to save money on premiums because the savings aren't worth the financial hit when you have a claim. Never skip uninsured motorist coverage or rental car coverage to save a few dollars per month. And never assume your current coverage is adequate just because you haven't had an accident yet. The time to evaluate your insurance is before you need it, not after. Now let me give you the exact action plan for implementing bulletproof coverage. First, pull out your current policy and make a list of your current coverage limits and deductibles. Second, use the framework I provided to identify gaps in your coverage. Third, get quotes from at least 3 insurance companies for the coverage configuration I recommended. Fourth, calculate the total cost of ownership, not just monthly premiums, by factoring in deductibles and coverage limits. Fifth, choose the company that offers the best combination of coverage, service, and price. But here's the most important thing I learned from this entire experiment. The difference between cheap and expensive car insurance isn't about the money you pay every month. It's about the financial protection and peace of mind you get when disaster strikes. Good insurance should make your life easier when bad things happen, not create additional stress and financial hardship. After spending a month testing both extremes, I can tell you with absolute certainty that the most expensive mistake you can make with car insurance is trying to save money by buying inadequate coverage. The few extra dollars per month you spend on proper coverage will be the best investment you ever make if you're ever in a serious accident. But this experiment also taught me something broader about how we make financial decisions. Too often, we focus on the immediate cost instead of the long-term value. We choose the cheapest option without considering what we're really buying or what we're giving up. This applies to insurance, but it also applies to everything from the food we eat to the tools we buy to the investments we make. The cheapest option is rarely the best value when you factor in quality, reliability, and long-term costs. I started this experiment to find out what you really get for your money with car insurance. What I discovered is that you get exactly what you pay for, and the cost of paying too little can be devastating. So here's my challenge to you. Take the time to properly evaluate your car insurance using the framework I've provided. Don't just look at the monthly cost, look at the total protection you're getting for your family. Because the few minutes you spend reviewing your coverage today could save you from financial disaster tomorrow. And if this series has helped you understand car insurance better, I want to hear about it. Leave a comment telling me what changes you're going to make to your coverage, and subscribe for more experiments that reveal the truth about financial decisions that affect all of us. Next month, I'm going to conduct a similar experiment with health insurance to find out whether expensive health plans are worth the cost, and I think the results are going to surprise you even more than this car insurance investigation did. Until then, drive safely and make sure you're protected when you do.